Okay, let's continue this conversation on the economic side of the street. This is an economic briefing with Jolomi Odongaro, who is a senior associate and investment research team lead at Afrinvest. It's live to us from the Nigerian Stock Exchange studios in downtown Lagos. Thank you very much, Jolomi. You're coming in to have this a bit of an economic conversation, but it looks like the business combination of Access and Diamond Bank is taking the better side of that from the weekend and what is all breaking on social media, online, on television, and everyone's scratching around this story today. You folks at Afrinvest always publish this very nice annual report about the state of the banking industry. I'm not sure anyone envisaged this corporate wedlock.
Yeah, you're right. It's coming as a bit of a surprise. I mean, if you look at the financials, yes, there were some issues. There were some issues that we noted as well. I mean, if you look at the amount of liabilities the bank, Diamond Bank specifically, have in 2019 versus the cash they have on hand, you could see that there were issues surrounding capital or the need for a capital injection. And so, I mean, these are things we noted, but we didn't expect a situation where there would be the need for a consolidation or more likely an acquisition.
I'm going to very quickly, we'll talk about inflation and the budget. But again, if you look at tier 2 banks, we've seen tier 2 banks, Sky Bank becoming Polaris, crossing the bridge to become Polaris Bank. Then we're seeing Access Bank taking Diamond off the market and going to put Diamond in his back pocket. So, Jolomi, does it mean that we need to put a permanent eye on the rest of the banks within the tier 2 space?
I wouldn't say necessarily the tier 2 space. I think greater supervision is definitely needed on the banking space. I mean, there's quite a multitude of demands on the CBN, and obviously in times such as these, you see greater supervision when it comes to FX management. And so I think that there needs to just be a greater oversight and supervision of the banking sector in general to make sure that on an ongoing basis, banks are have good liquidity levels and have a strong capital basis, to be honest.
There'll be more time to speak to you and the rest of your team, Jolomi. But again, let's come back to inflation, which came in a little bit uptake to 11.28% over the weekend. Is this a surprise?
No, it's not a surprise. I mean, the downtick in the previous month to 11.26 was more of a surprise. What we've seen now, I mean, what happened in the previous month was obviously the impact of the harvest season. So we saw a bit of a slowdown in food inflation. But what has happened now is it's pretty much following the trend for what has happened for the previous all through the year up until now. So food inflation has picked up, and this is, I mean, when you come to this time of the year, the festive period sort of counterbalances the impact of the harvest period, and that's what we're starting to see now. So, I mean, what we've seen now is actually what we had expected, and so it's expected also on the core inflation side, which is a bit of a surprise on our end as well. Core inflation is slowed down after an uptick in the previous month, and this is primarily due to a slowdown in the increase in energy and transportation costs. But overall, we expect the impact of the festive period to increase demand, and so expect inflation to uptick again in December. And so we've adjusted our expectation for the monthly average inflation to 12.2%, and this is as compared to 16.9% for 2017 and 15.8% for in the preceding year from then.
Okay, so what's the outlook on December inflation based on the current November reading? Will we touch 11.3? Most likely?
Yeah, like I mentioned. So sorry, I didn't get the last part.
I was asking if we will hit 11.3 by December to wrap up the year.
Inflation, we expect. Yes, so we definitely expect an uptick in inflation for December, and that's to be expected. I mean, demand levels in the festive period tend to increase, and so you see the commensurate increase in food inflation, and also, like I mentioned, the slowdown in the increase in both energy and transportation costs was unexpected, and so we expect an uptick there as well. So overall, we expect inflation for December to uptick from the previous months, from this month, from November inflation. So we expect about 11.3, slightly over, to bring the average monthly to about 12, an average of 12.2 for 2018.
So how should this inflation figure play into President Buhari's budget 2019 presentation on Wednesday?
I mean, the inflation right now is not surprising. Is not surprising at the level it was. I mean, if we saw a significant spike or dip outside of market expectations, it would be more of a worry. But for now, what we're seeing is there remain issues, pressure points when it comes to inflation. I mean, there remain unresolved issues, for instance, in the Middle Belt, which has had an impact on food inflation through the year. And if there's obviously any sort of uprising in that region, again, what you see is food inflation will spike. And if you take into consideration that food inflation is 50% of the basket, what you see is an uptick in headline inflation, which has significant impact on the economy overall, on the well-being of people, and amounts of disposable income, and so forth.
Yes, so what's going to be the big story in the budget for you? What will you be looking for on Wednesday?
I mean, right now, what we've heard is that the budget is going to come in at about, the government wants to spend about 8.6 trillion in 2019. This is relative to 9.2, which was projected for the prior year. We still see this as quite a bullish number when you consider the fact that revenues have consistently as fallen quite significantly short of the expectation. When the figures came in about July, August, we saw that the revenue shortfall was about 50%. And this is primarily due to poor non-oil revenue collection, which we expect will still remain an issue in 2019. And so obviously that figure is going to be quite bullish. I mean, even at the point when we got those figures in August, we saw the deficit at around 3.4%, which is outside the Fiscal Responsibility Act, which pegs that number at 3%. I mean, we're still projecting about 2.9%, which is under for 2018. But when you take into consideration increased expenditure costs when related to the debts, newly issued debts, which is going to start being serviced from next year, and the expectation that revenues will not outperform 2018 significantly, we are looking for more realistic figures at the budget presentation.
In terms of the key parameters, do you think we should tinker with any one of them? For example, the oil price or exchange rate?
I mean, the oil price, taking oil price first, if you look at the oil price, I mean, an oil price projection of about $50 per barrel, given the fact that OPEC seems to be on board with cutting production to maintain price at a good level, despite expected increased production from the U.S. An oil price level between 50 and 60 is probable for 2019. So projection at that level is fine. Then on the production side, we expect about 200,000 barrels to come online next year from the Ogena plant. So projection levels in the 1.8 to 2 million barrels level is prudent. But on the exchange rate level, we believe that there's a need to converge the rates to converge the rates in the market. So I mean, that has obviously a good impact on government revenues, and it's something that we've mentioned through the year. And we would like to see a more realistic projection of that exchange rate figure to match the market value.
Okay. So what exchange rate? What figure do you think will make should make 2019 budget work?
363 level.
363 level?
The NAFEX rate right now, we believe, is the more. 360 level is it seems is where supply and demand out